In the case where the options to save the home get eliminated right off the bat because you don't want to stay in the home, you've decided it would be too difficult to save the house, or you've just decided it's not worth the hassle and you want to move on and cure the problem by exiting the property, there are a number of options that can be used. The first option is the classic stick your head in the sand and just sit this thing out. Some people do that, and there's a positive way to look at that. That's a point in your life where you can establish a fresh start fund. Unfortunately, the foreclosure process, there is credit damage, and this could affect your credit for up to 7 years. As always, if anything could be stopped in the foreclosure process, it would really help your credit out immensely. So the first option is to do nothing, and what will happen is that your property will go into foreclosure and be sold at auction. The second option is selling. The other obvious option on the table right off the bat is to go ahead and sell the property, and hopefully this will turn out to be a good solution. There are a couple of problems with that right now, and in particular in this market, obviously there's a lot of houses for sale out there and none of them are selling that quickly. Right now you can expect in most markets for most properties to be on the market for 90 days or more, and in many cases 6 months or even a year is not rare for higher value properties and shall we say other unique properties. And in addition to that, there's likely to be a discount from the asking price just to get the property sold because of the large inventory. Something else to consider is that when the property is sold, there are a number of costs that are associated with selling a property. The closing costs such as taxes, lawyers' fees, and filing fees are part of those. The biggest of the fees is probably the commissions to real estate professionals. And these are typically 5 to 6% in Chicago and the state of Illinois. They may vary a little, but they're usually a very significant cost. The total closing cost would be about 10% of the purchase price, which comes out of the sales price and may result in the seller having to bring money to the table at closing. Because of the likely deficiency in paying off the existing mortgages at the time of closing, plus the closing costs have to be made up in cash at the closing table, the deal may not close. The lender for the buyer will not release the funds to close the deal because the seller is obligated to provide clean title at the time of closing. Now, one way that some people try to avoid some of those closing costs is to go for the sale by owner route. That can actually help save the commission, but it's actually quite more difficult to sell a property. You don't have the tools at your fingertips that most professionals do, like the multiple listing service, and therefore you are at a disadvantage. Even in those cases where you are successful, you're likely to have a buyer's agent brought with the buyer to your property, and you're going to end up having to pay part of that commission anyway. So selling is an option, but it can be rather expensive with the costs associated and slow with the time it may take to sell. The biggest mistake some owners make in a selling strategy is they let time pass that could be used to pursue one of the options we're going to talk about next. This third option is a hardship mortgage assumption. Now this assumes that you find a buyer and the buyer likes the current rate you have on the mortgage. The assumption allows the buyer to move the process a lot faster than getting their own mortgage. But lenders will only allow this to happen if the property has less than 15% equity on it, and the potential buyer must be able to qualify under normal loan circumstances. So it's a great and expeditious option for a buyer to come in when you're in a hardship position. But you're essentially combining the difficulties of selling with another complication of these transactions, which is getting a mortgage. So with that hardship mortgage assumption, you still have to sell a property, and there's going to be closing costs. I've never heard of buyers seeking out these options or of someone transacting this way in the marketplace. The next option that is available to an owner in distress is something called a deed in lieu of foreclosure. And essentially what's done in that case is that the owner basically hands over the deed to the mortgage holder in exchange for being able to walk away. Now, it doesn't cure the credit implications. In some cases, the lender may agree not to pursue a judgment typically, but they will report to credit bureaus that you have not paid as agreed on your mortgage. But this is a viable option. Essentially, as I said, you convey the title, but there are restrictions, and the restrictions are going to be strict in a lot of cases. There are basically 4 things up front. The property cannot be abandoned, it has to be occupied, it has to be clear to the bank that you exhausted any options to pursue exiting a property on your own. And one of the ones where you can really get hung up on is any other lender that has a lien on the property has to waive that lien. So if there is a second mortgage, that claim has to be waived in order for the deed in lieu to go through. And lastly, and critically, there can't be physical, environmental, or rather conditions that affect the lender and cause liability on their part. Practically speaking, the property must be listed for at least 90 days, and it's important to point out here that there is tax liability that's possible after handing the deed over to the bank.